morning and happy Friday to you. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Prime Minister Modi assures assistance to all returning to Jammu and Kashmir to celebrate Eid, says situation will return to normal slowly. Yes Bank has launched a $275 million QIP issue in order to meet urgent funding requirements. The floor price of the issue has been set at 87.9 rupees per share. Inflows into equity mutual funds rose for the third straight month, even as Indian benchmark indices posted their worst July in 17 years. That's according to data from AMFI. And four Nifty companies, that's Bpcl, Britannia, Gail and Hindalco, will be reporting their quarterly numbers or earnings later today. Now, Asian markets are off to a positive start after a strong session on Wall Street outweighed concerns about the lack of progress in trade talks between the US and China. Let's talk about that US session now. US equities rallied after China's stronger than expected daily fixing of its currency eased fears about a worsening of trade conflict. The S&P 500 index posted its biggest gains in 2 months, building on gains in Europe and in Asia during the session yesterday and erasing its loss for the week. Sue Keenan of Bloomberg News gets you the highlights of that session in this report.
The latest session on Wall Street saw a relief rally in stocks, with the S&P 500 expanding by the most in 2 months and the tech-heavy Nasdaq up better than 2%. In fact, one widely followed strategist said he believes that the worst is over in terms of volatility and that China did the right thing. However, after the bell, the White House announced that it was suspending licenses for companies here in the U.S. to restart business with Huawei, and that this was in retaliation for a China move to halt purchases of U.S. farming goods, a move that may, in fact, restart the volatility. In the regular session, we saw stocks like AMD, the chip maker, surge some 16% as it announced a new game-changing chip. Companies like Kraft Heinz, a food company, fell to a record low as it announced trouble with its turnaround plans. After the bell, it was all about Uber, the ride-hailing company. It announced a second quarter adjusted sales that fell short of expectations and an eye-watering $5.2 billion net loss, most of that attributed to the stock-based compensation that's associated with an IPO. In any event, that also caused shares of Lyft, its rival, to fall after hours. And there was a deal after the bell. Broadcom saying it agreed to buy Symantec's enterprise software division for about $10.7 billion in cash. In New York, Sue Keenan, Bloomberg News.
Now, with multiple salvos and strong words having been exchanged in the trade war between the US and China, the latest update, and something that Sue Keenan alluded to, is that the White House is holding off on licenses that will allow American companies to do business with Huawei. And this comes after China ordered a stop to the purchase of US agricultural goods. What's next? Selena Wang of Bloomberg News might have that answer.
Escalation continues. That reprieve from the PBOC stronger fixing was just a very, very weak reprieve. Now, this really dampens Huawei's smartphone business, of course. They're still very reliant on that Android operating system, especially for the phones that they sell abroad. And earlier, we did see companies like Qualcomm and Micron actually fall quite substantially on this news, since, of course, these U.S. companies want to be able to sell to one of their biggest suppliers. Now, this clearly isn't going to go over well in China, and this report came after reports that China was going to be halting those agricultural imports. We have seen them shift quite substantially to South American buyers. Agricultural imports are a key point of negotiation for China. It's not going to be something easy to agree to, since Trump's base really relies on a lot of these sellers, these farmers that really rely on Chinese buyers. Now, on the Huawei front as well, we're probably going to see a flurry of commentary from the Chinese state media. So far, they've said that things like maximum pressure aren't going to work. Trump's current tactics are going to backfire. They've even gone so far to say that maybe China won't even come to the negotiating table. So things aren't looking good.
And of course, if they don't get access to those components or that software from Google, for example, then they don't get access to Android OS, which is a problem for their smartphones, but they're developing their own OS. What kind of challenges does that face potentially?
So this is codenamed Hongmin, or ARC. There's a developer conference happening right now where this is being unveiled. This is Huawei's bid to really be self-reliant. They're taking a page out of Apple's book. Apple really is trying to vertically integrate their supply production on the hardware and software side. They are completely self-reliant when it comes to iOS. Huawei wants to do the same thing with this Hongmeng OS. But of course, the big piece of skepticism is, are they going to be able to convince developers that they should develop for this platform in addition to Android and in addition to OS? So a lot of challenges ahead, but it's a first step for them to become self-reliant.
Now let's see what's making headlines apart from what we've already spoken about across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
UK Prime Minister Boris Johnson is calling on European Union leaders to, quote, show some common sense and rewrite the Brexit divorce deal. With just 84 days to go until the UK is scheduled to leave the EU, Johnson says there's still plenty of time for the withdrawal agreement to be changed. He has repeatedly said he'll take the country out of the bloc with or without a deal at the end of October. Singapore says it's ready to stimulate its economy in the face of weakening global demand and the U.S.-China trade war. And it warns that the threats posed by uncertainty are likely to be long-lasting. Prime Minister Lee Hsien Loong used his National Day message to reassure his audience that Singapore has experienced slowdowns before and that the government will launch stimulus as necessary. The Philippines cut its benchmark interest rate by 0.25 percentage point, resuming policy easing after economic growth and inflation slowed. The BSP reduced the overnight borrowing rate to 4.25%. Now that was predicted by almost all economists surveyed by Bloomberg. Governor Ben Jokno said there's room for further easing as weak global prospects are tempering inflation. And Italy may face a snap election. That's after one of the leaders of the coalition government admitted it no longer has a majority in parliament. League leader and Deputy Prime Minister Matteo Salvini said he's ready to terminate the fractious relationship with the Five-Star Movement and will call a vote of confidence next week. Prime Minister Giuseppe Conte says Salvini doesn't have the power to make such a call. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
So we spoke about that session in the US overnight where the three benchmarks did very well for themselves. In fact, that seems to be having a bearing on the Asian markets as well. Just about 15 minutes back, only three of them were open and all three of them were in the green, with the Nikkei in Japan trading positive by nearly 0.5%. Now you have the Chinese markets that have come on stream. You also have the Hang Seng in Hong Kong that's indicating that it's a positive start for most of them. But at least for the Hang Seng, it's only a 0.3% gain. For the Chinese benchmarks, also about 0.3% as of now. So not the biggest gains at the end of the week, at least not at par with the session in the US on Wall Street. So we'll have to see how that pans out. For now, though, it's a green across the board. We'll have to see whether it stays that way. And in fact, let's talk about the Indian markets as well. Agam Vakil is here to tell you all about that, and also to tell you what's happening in the futures and options space. As of now, like I was saying, Agam, it's positive, but it might just change.
Yeah, well, let's wait and watch, Alex. But for now, as you've said, the SGX Nifty futures are indicating a positive start. What we saw yesterday was a very strong up move in the indices with, well, the Nifty, of course, advancing by quite a bit, 1.6% increase. And, well, the broader markets also following up, with the banking indices also seeing advances. So we do have gains across. Let's talk about ADRs then. And again, when it comes to some of them, we do have strong gains for Tata Motors and Vedanta, which stand out in trade. We also have gains in something like an ICICI Bank along with Dr. Reddy's too. So gains all across. And as far as the fund flows are concerned, we saw a little bit of temperance in the FII outflow number from 2,000 crores for the two to three straight sessions. It's now come down to 437. Well, a net sell number, albeit. But DIs, of course, on the other hand, continuing to buy. Now, 177-point up move. And a lot of that was on account of Reliance Industries, HDFC Bank, and Infosys. But moving on, let's talk about futures and options space. Have things changed? After the strong up move yesterday, yes, we did see short covering with a decline in open interest in the Nifty futures. The Bank Nifty futures also showed a decline of around 4% in open interest. Moving on, we do have your open interest distribution between 10,900 and 11,100. Of course, this is for the weekly expiry. And as far as your change in open interest is concerned, we saw writing around the 11,000 put. given the fact that we did see some strength coming on the Nifty. Of course, given the fact that the benchmark indices advanced, we saw the VIX fall off by around 4%, but still above the mark of 16. And coming down to your Nifty put call ratio, that has also edged higher to around 1.2. So a very, very strong up move as far as the PCR is concerned. In terms of stocks, ICICI Prudential stood out in trade, and we did see some shorts building up in Just Dial and Ramco Cement as well. And in terms of stocks which are seeing unwinding, we also had Cipla, of course, in focus, considering a decline there. Longs unwinding there, but Max Financial, on the other hand, seeing short covering. Arvind, of course, will also react to earnings. That also saw some longs unwinding. So a mixed day of trade when it comes to stocks, Alex, but the indices were very strong yesterday.
Thank you so much for that, Agam. All right, let's talk about sentiment, and that's what it's all about. Sentiment on Dalal Street seems to be on the mend. And what may aid that is robust flows into equity mutual funds, the domestic one. Flows rose for the third straight month in July, even as equity benchmarks posted their worst month in 17 years. Yash Upadhyay spoke to NS Venkatesh, the CEO of the Association of Mutual Funds across India, and began by asking him about the factors that led to the increase in inflows. Listen in.
I would say that one, the investors are slowly maturing, and they are showing that confidence and the faith in the mutual fund industry. They continue to remain focused. They are investing into the equity through the SIP routes as well. So to that much extent, this has translated into over 8,000 crore. And within this also, the sub-segments, if you are looking at the sub-segments, you will see that it is in the mid-caps sort of things which have shown a positive sign. So I'm very happy to say that as the investors are slowly maturing, despite market volatility, they continue to remain invested for their own investment goals.
Right. You mentioned about how there have been flows coming in also on account of the two large NFOs that we had last month. But on the equity side of things, what we've observed from the data largely is the fact that a lot of the money has gone into the large cap and the focused fund space, but still there is some amount of hesitance when it comes to the mid and the small cap space as well. There's this flight to safety. What do you understand of it, and do you see that going forward in the future with the risk to reward ratio being also very favorable, and at historical levels, this is the ratio where we've seen the broader markets outperform? Do you see the space growing faster than usual and growing faster than the large cap peers going ahead?
No, I believe that the revival in the mid cap will happen at the initial stage, and then over a period of time only, maybe they will outperform the large caps sort of space. So at this stage, at this juncture, we are seeing some green shoots there, in the sense that we are seeing that essentially people are looking at the mid caps much more closely and started investing there, because the valuations have been downright very low. So they believe that these are all attractive valuations for them to re-enter. So we are finding green shoots there.
Things starting to look positive on the debt side. We've seen a positive number, although the last month was because of the quarterly phenomenon that we saw the big outflow number. But what, according to your experience, are you seeing in terms of the debt side? How are things panning out over there?
Somewhere around 88,000 crores has come as a positive inflow into the debt side. It is mainly aided by the liquid funds as usual, where liquid funds is around 45,000 crore and overnight fund is somewhere around 9,000 crore. So 54,000 crore gets explained by the liquid fund phenomena. But I would say that people should now look at the debt funds much more closely and the gilt fund as well, for the simple reason that we are entering into a new territory of low interest rate scenario. So when the monetary policy stance is very, very favorable for a lower interest rate regime, with 35 basis point being cut by the Reserve Bank governor yesterday. So I think we are entering that territory. This is the right time for people to look at debt much more closely and start investing in funds where the underlying papers are of highest quality of AAA paper, so that at least they are able to get the benefit of the movement in the interest rates, which will act as a kicker, so that their overall returns will improve. And when you are looking at, let us say, the way the rates rates have been cut by the central bank, the banks will also cut the deposit rates and the lending rates as a part of monetary transmission. So if that is what is going to happen, then the savers will be looking for a little bit of a higher yielding instruments. So that means they will move their part of their allocation into the mutual fund. So we believe that more such allocations will start coming into the mutual fund segment.
All right, the Finance Ministry is finally showing some signs of yielding to demands to roll back the surcharge levied on certain foreign institutions. FPIs have sold a large amount of equity since the union budget. The Finance Minister had subsequently informed the Parliament that there would not be a rethink on the issue, spooking investors further. Nikunj Johri sums up what the government's latest stance on the issue is.
The government is considering to give some relief to foreign portfolio investors who are currently facing the brunt of having to pay a higher surcharge that was introduced in the union budget. Remember, the budget proposed introducing a higher surcharge for individuals who earn more than 2 crore rupees annually, and this unintentionally covered foreign portfolio investors and alternate investment funds who are currently registered in India as non-corporate trusts. Post the announcement, post the proposal that was introduced in the budget, the markets have seen a sell-off triggered by foreign portfolio investors, and FPIs have pulled out about 11,500 crore rupees from the market. Besides this, the government is also expected to take a series of steps to revive growth in the economy. Finance Minister is meeting various sectors of the economy, and some relief for the NBFC sector is expected to be taken by the government, which in turn is expected to have a multiplier effect on the economy. Over to you.
All right, let's talk about earnings now. Bharat Petroleum may report a sharp fall in profit in the June quarter. Inventory losses and thin marketing margins may have hurt the numbers. Samit Sarkar gets us the expectations.
Well, if you see, Bpcl is expected to report a weak set of numbers. Now, compared to last quarter on a standalone basis, the company's revenues are expected to be higher by nearly 4% to close to 77,000 crore rupees. The net profit is expected to fall by nearly 68% to close to 988 crore rupees. The company's EBITDA, that is also expected to be lower by nearly 58%, while the margins are expected to come in lower at close to 2.6%. Now, the gross refining margin, that is the key number for the oil marketer and refiner, that is expected to come in at close to $2.96 per barrel, as against $2.74 per barrel reported by the company in the last quarter. Now, it is expected to be a weak quarter because of inventory losses and sequentially lower gross marketing margin earned on sale of every liter of petrol and diesel. Now, though Brent crude that averaged higher at around $68.52 per barrel in the first quarter of financial year 2020, it fell by nearly 20% in a 12-day period during Q1. Now, because of this sharp fall in Brent crude prices that we had witnessed in the first quarter of financial year 2020, the company is expected to report an inventory loss. Now, if you see on the marketing segment, the gross marketing margin earned on sale of every liter of petrol and diesel, now that declined to nearly 1.9 rupees per liter and 3.3 rupees per liter compared to 5.85 rupees per liter that the company earned in the fourth quarter of financial year 2019. Now, this was because of the election season that was there in the first quarter, and because of this sharp drop in the gross marketing margin, the company's marketing segment is expected to be weak compared to last quarter. Now, though Singapore gross refining margin that has averaged higher at around $3.5 per barrel, the company's GRMs are expected to be lower because of an inventory loss. On the operation side, if you see, the crude throughput that is expected to be marginally down by nearly 1% to close to 8.11 million metric tons, while the sales are expected to be down by nearly 2.5% to close to 11.36 million metric tons in the first quarter of financial year 2020. Now, the key things to watch out for from Bpcl earnings would include the inventory and the foreign exchange gains that the company reports. Along with that, the debt of the company is also one thing that one needs to watch out for, because last quarter the company's debt had increased because of rising subsidy dues. Along with that, management outlook on refining and marketing margin, the capital expenditure plans for FY20, and any update on the Kochi refining margins and the status of Kochi petrochemical project would be important to watch out for from Bpcl earnings today.
Sticking with earnings, better LNG and LPG prices may have offset stress in the petrochemical segment for Gail in the June quarter. Somit is here to tell you all about what the analysts are expecting and the key highlights for the natural gas player. Somit?
So if you see Gail on a sequential basis, expected to see a sharp jump in its EBITDA. Now if you see the headline numbers for the company, the revenues are expected to be higher by nearly 1% to close to 19,000 crore rupees. The net profit is expected to be higher by nearly 14%, while the EBITDA is expected to see a jump of nearly 31% compared to last quarter to close to 2,200 crore rupees. The margins are expected to come in at around 11.6% for the company, while on the operation side, if you see the gas transmission volumes, they are expected to be higher by nearly 1% to close to 110.6 million metric standard cubic meter per day, while the petrochemical volumes, they are expected to be lower by nearly 9% to close to 194,000 metric tons in the first quarter of financial year 2020. Now it is expected to be a strong sequential quarter for GAIL because of a strong LPG, petrochemical, gas transmission and marketing segment of the company. Along with this, lower operating costs would also boost the company's EBITDA in the first quarter of financial year 2020. Now LNG trading margins are expected to be higher because of improvement in pricing, while the petrochemical earnings are also expected to be better compared to last quarter. However, the overall petrochemical environment is expected to remain weak because of a planned shutdown and flat prices compared to last quarter. Now the LPG segment, that would also improve because of higher average pricings. However, somehow if you see the quarter-on-quarter numbers of GAIL would not be directly comparable because the fourth quarter of financial year 2019 had several one-offs. Along with that, there was a foreign exchange impact on that number, and also the other income was significantly higher for the company. So you cannot compare exactly the numbers of the fourth quarter with the first quarter of financial year 2020. Now the key things to watch out for from GAIL India earnings would include management update on execution of new pipelines, along with that a status update on the Kochi-Mangalore pipeline, visibility on placement of US LNG contracts, and any guidance on transmission and trading volumes would be important to watch out for from GAIL India earnings today.
Let's turn now to the third Nifty company. Britannia may report a decent set of numbers despite the weak demand environment, and benign input costs are seen providing some support. Agam Vakil is here to tell you all about that. Agam, well, the headline numbers first.
Right, Alex, it's actually going to be a fairly decent quarter considering the trends that we have witnessed of late from FMCG companies. When it comes to the headline numbers, we're expecting nearly 9% growth in the net sales. EBITDA margin is expected to expand just a tad bit to around 15.4% by 10 basis points, and net profits likely to rise around 11%. In terms of volumes, well, we're expecting the biscuits volumes growth to come in at around 6%, but realizations and pricing could be higher by around 3 to 4% too out there. Gross margins are expected to expand on benign input costs, and we do see lower wheat, sugar and milk prices continue to have a positive impact on the margins. In terms of what we are going to watch out for is, of course, demand sentiment, especially in the rural and the urban sector. And more importantly, the company has been mentioning about the challenges in distribution in the North Indian belt. That is something that we're also going to keep an eye on as far as updates go. But on the whole, we're expecting a stable quarter from Britannia.
Thanks, Agam. All right, global growth concerns aggravated by trade tensions and the resultant fall in metal prices are likely to have taken a toll on Hindalco earnings in the June quarter. Nikki Mirchandani is standing by with what the markets are pricing in.
Well, we aren't expecting good set of numbers coming in from Hindalco. If you look at the top line growth, again, we're looking at a flattish trend. That's pretty much a factor which has panned out for all the metal companies this time around. Profitability of the company is expected to be lower. Operational performance, we're looking at a 44.3% kind of downtick. Margins are expected to shrink to 9% as compared to 16%. And the PAT figure is expected to come down by as much as 36%. On the volume front, aluminium, we're expecting a mild growth there, 320 KT compared to that of 300 KT in the corresponding quarter. Copper too, the volumes were expected to be higher marginally at 85 KT as compared to 82 KT. In terms of the segmental breakup of both aluminium as well as the copper division, for aluminium we're expecting a 46% downtick, and for copper division too we're expecting a 17% downtick. A combination of 2-3 factors, that is the lower LME prices and the weak copper earnings, are expected to weigh down on the overall standalone plus Utkal performance of Hindalco. And the favorable hedges, the impact seen on account of that is expected to be partially offset by the lower LME prices. Besides that, we are also expecting some kind of disruption coming in for the alumina division on account of the Muri refinery disruption there in that refinery. That is expected to have some amount of incremental cost pressure for Hindalco. 3 things that we like to watch out for would be the production cost for both aluminium as well as copper division, and we'd like to look at for the shutdown impact the quantum of that in this quarter earnings, and commentary and concerns related to Aldra's acquisition. Now remember, a day back, Aldra's has already reported, Novelis subsidiary, step-down subsidiary, has already reported that's going to be delaying the acquisition of Aldra's by another quarter. That seems to be a cause of concern for most of the brokerages around. We'd like to understand if the deal, how confident is the management, whether or not the deal will be able to go through, and if not, what would be the breakup cost related to this? Back to you.
All right, so that's all about the earnings, or the major earnings that you have to watch out for in trade today. Mishika Parak is joining me to tell you all about the stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alex. First on my list are quarterly numbers of Page Industries. Their results missed estimates, and this was the first quarter with a volume decline of 2%, which shows market share loss, especially in the men's innerwear segment. Margins were impacted by higher employee costs. The management commented that second quarter has been muted so far, but they're confident of maintaining margins. Next on my list is Taro, which is Sun Pharma's US-listed subsidiary. Their sales are up 4%, profits down 2%, EBITDA is up 8%. There was a forex income of $7.9 million due to strengthening of the Canadian dollar. Higher tax expenses impacted the profits, and management highlights challenges in the industry. Hexa Technologies, their results were in line with estimates, led by strong execution and margin recovery. There was 15 days of revenue contribution from the recently acquired Mobiquity. Travel and transportation and banking and financial services were weak, while other segments showed strong performance. Hexa is guided for around 19% year-on-year growth in US dollar revenues. Mahanagar Gas, it was a strong quarter for margins while volume growth lagged. Highest ever EBITDA of 10.25 rupees per standard cubic meter. CNG volumes growth lagged estimates with 2% growth, and PNG residential grew by 9% while PNG industrial grew by 5%. Yes Bank's QIP of $273 million opens, and this QIP will lead to a dilution of 10%. The floor price is set at 87.9 rupees per share, and the indicative price is at 83.5 rupees per share. These proceeds will be utilized for capital requirements under the Base 3 norms. Jamna Auto Industries have made changes in the production schedule for all its plants. The plants may not run or partially run in the month of August. Diwan Housing Finance may not be able to meet repayments coming in the immediate future.
All right, thanks so much for that, Mishika. Now, Prime Minister Narendra Modi, in a special broadcast to the nation at 8 p.m. last night, spoke about his government's latest move to abrogate Article 370 of the Constitution that gave special privileges to Jammu and Kashmir, and the subsequent measure to split the state into 2 union territories. Here's what he said.
आर्टिकल 370 और 35A ने जम्मू कश्मीर को अलगाववाद, आतंकवाद, परिवारवाद और व्यवस्थाओं में बड़े पैमाने पर फैले भ्रष्टाचार के अलावा कुछ नहीं दिया। इन दोनों अनुच्छेद का देश के खिलाफ कुछ लोगों की भावनाएं भड़काने के लिए पाकिस्तान द्वारा एक शस्त्र के तौर पर इस्तेमाल किया जा रहा है। अभी केंद्र शासित प्रदेशों में अनेक ऐसी वित्तीय सुविधाएं जैसे एलटीसी, हाउस रेंट अलाउंस, बच्चों की शिक्षा के लिए एजुकेशन अलाउंस, हेल्थ स्कीम जैसी अनेक सुविधाएं दी जाती हैं, जिनमें से अधिकांश जम्मू कश्मीर के कर्मचारियों को, पुलिस परिवारों को नहीं मिलती हैं। ऐसी सुविधाओं का तत्काल रिव्यू कराकर जल्द ही जम्मू कश्मीर के कर्मचारियों को, पुलिसों को, उनके परिवारजनों को ये सुविधाएं मुहैया कराई जाएगी। जब से वहां गवर्नर रूल लगा है, जम्मू कश्मीर का प्रशासन सीधे केंद्र सरकार के संपर्क में है। इसकी वजह से बीते कुछ महीनों में वहां गुड गवर्नेंस और डेवलपमेंट का और बेहतर प्रभाव जमीन पर दिखाई देने लगा है। जो योजनाएं पहले सिर्फ कागजों में रह गई थी, उन्हें अब जमीन पे उतारा जा रहा है। जम्मू कश्मीर और लद्दाख में सभी केंद्रीय और राज्य के रिक्त पदों को भरने की प्रक्रिया शुरू की जाएगी। इससे स्थानीय नौजवानों को रोजगार के पर्याप्त अवसर उपलब्ध होंगे। साथ ही केंद्र सरकार की पब्लिक सेक्टर यूनिट्स और प्राइवेट सेक्टर की बड़ी कंपनियों को भी रोजगार के नए अवसर उपलब्ध कराने के लिए प्रोत्साहित किया जाएगा। इसके अलावा सेना और अर्ध सैनिक बलों द्वारा स्थानीय युवाओं की भर्ती के लिए रैलियों का आयोजन किया जाएगा। सरकार द्वारा प्रधानमंत्री स्कॉलरशिप योजना का भी विस्तार किया जाएगा ताकि ज्यादा से ज्यादा विद्यार्थियों को इसका लाभ मिल सके। हम सभी चाहते हैं कि आने वाले समय में जम्मू कश्मीर विधानसभा के चुनाव हो, नई सरकार बने, नए तेजस्वी ऊर्जावान नौजवान एमएलए बने, मंत्री बने, मुख्यमंत्री बने। मैं जम्मू कश्मीर के लोगों को भरोसा देता हूं कि आपको बहुत ईमानदारी के साथ पूरे पारदर्शी वातावरण में आपके अपने प्रतिनिधि चुनने का अवसर तुरंत मिलेगा।
All right, well, there's a lot more where that came from, and that's all available on BloombergQuint.com. So don't forget to check it out, not just today, but over the weekend. Thanks so much for watching.